is a sight for my soul.
We're going to look at some policy ownership questions that come up quite a bit here. In particular, if someone wants a high cash value life insurance policy for the cash value, but it is life insurance, I've got to go through a medical exam, I have to get approved, and I'm uninsurable. I've got a health issue where I'm rated or I get declined altogether. What are my alternatives? Well, I can own a policy on another individual. So firstly, what that means is if I, Steve, own a policy on Bob, here's what will happen. The owner has complete control of everything, meaning I, Steve, the owner, make the premium payments. Premium/PUA, let's just call them contributions. As the owner, I have complete control over the cash value, assigning beneficiaries, any type of changes, really anything and everything that can be exercised or executed with the policy. Again, the owner has complete control of this. If the life insurance aspect is on Bob, what that means is the death benefit piece is only paid out if and when Bob dies. If anything happens to the owner, there's no death benefit paid out. Ownership has to be transferred either to Bob, to a trust, however it's set up. The advantage to this is if I, Steve, have a health issue and I cannot get insurance, but I like this concept, I want to take a policy out. I can take a policy out on someone else, where again, I have control of everything. I make the contributions, I can borrow and repay all day long, I have access to my online account. The only difference is that the life insurance payout is paid out when? When the insured, in this case Bob, dies. So who can I own a policy on? This comes up quite a bit, or we get the question, which we have another segment on already, can I own a policy on my kid because the insurance will cost next to nothing and I can just stuff a ton of cash in there? That can be difficult. So when it comes to ownership, a couple things here as far as who can I own a policy on. Here's what we got. Again, I have a health issue. The first go-to is usually family, whether it's a spouse or child. So let's say I, Steve, earn $100,000 a year. That's my income. Let's assume my wife does not work. To get life insurance on her, again, I want to build this policy for cash value. She does not work, so an underwriter will look at the case and say, okay, this individual does not work. There's no justification for a life insurance policy here. So what we bring up is the case, okay, the household income is $100,000. Typically a spouse can qualify for up to 50% of how much coverage the working spouse can. Now in a case where I'm uninsurable, what would happen is I can try and push up the amount of coverage. Okay, I want the ability to put in $50,000 per year. I can't get the policy on me. I'm trying to do this for cash value planning. We want to let the insurance company know here's what our specific goal is, and then at times, it does not always happen, but at times we can get the coverage we need on our spouse or another family member to get the appropriate amount of mech space so we can actually fund a policy. So we can more so bypass limits, and the exception is the case that the primary earner U stands for uninsurable. He can't get the coverage. So as an alternative, the primary earner is still going to own a policy on someone else, but the life insurance component is on them. We've got to present that properly to the underwriter to make this work. So family, we can own a policy on a family member and typically make it work, meaning a spouse is easy. Now, owning a policy on kids can be difficult. So again, let's assume I'm uninsurable and I have a 10-year-old. I want to be able to put in, call it $50,000 a year into a cash value life insurance policy. I cannot get coverage myself because I'm sick. On the 10-year-old, he's healthy, should perform great. The issue here is if I want to put in $50K on a 10-year-old, for a $50K MEC limit, he's going to need something like $4 million in death benefit. Because he's so young, a dollar gets him so much life insurance, and the younger you are, the lesser the MEC limit. Point being is that will be difficult to obtain. Even when we let an underwriter know, or an insurance company, well, I can't get coverage, here's what I want to do, they're often still going to limit how much can go on the child. Typically, the default answer, as far as how much a child can have in life insurance, is 50% of the parent with the most amount of coverage. So for example, if you have $1 million in coverage as a parent, the maximum amount of life insurance a child could obtain would be $500,000. That's the standard criteria used by insurance companies determining how much minors can have. Anyway, back to this. Again, assuming I'm sick, I want to be able to put a lot in on my kid. It's going to be difficult because he's going to need so much death benefit to be able to put in that $50K contribution. So often, using a child as an alternative individual to put a large policy on can be difficult. It can be a challenge. Won't always get approved. The other alternative, a business partner. So I can't get coverage. I want to put a policy on Joe. And again, I want to own the policy on Joe. What the underwriter is going to ask is, what is the financial interest here, the insurable interest? It's not as easy just to say, well, he's my business partner. Maybe I can present it as key man insurance, but I'm going to have to do a lot more explaining. It is possible, but it's not always a simple process. So a business partner, it's going to depend on circumstances, and it's going to be a maybe, depending on the details, which we won't go through in this segment. And lastly, a friend. Can I put coverage on my friend because I can't get coverage? I don't have any other family members or anything like that. Typically the answer is no, unless there's some kind of financial interest there. Again, what an insurance company is going to say, even though our goal is to maximize cash value, I want to put a policy on my friend because he's healthy and I'm not. I want to own it. I want to control it. What the underwriter is going to ask is, if anything happens to your friend, like, where's the financial interest there? Are you losing out on any money? Are you reliant on his or her income? The answer is usually no. And that's where the underwriter and insurance company is going to come in and say, no, we can't do that. So there are rules. There's a lot more to it than what we're putting on this video, but it's good to be aware of it. If I have a health issue, I can own a policy on someone else, but I want to ask the question, who can I put it on? Am I going to have limits? Do some companies allow it and others don't? Hope this helps.